Well, I'm joined now by Justin Urquhart-Stewart. Justin, I suppose the first question is, how is the economy looking at first blush? How are we doing?
The answer is flat as a pancake at the moment, but it's not just us. Actually, most of the other leading countries are in exactly the same position. And so at the moment, we've got figures which they come up monthly, but they're highly unreliable. So we're seeing figures around about 1%, but frankly, if you regard it as zero, that's probably closer to the truth.
1%, what do you mean? 1% growth? What are we talking about? 1%?
1% growth is what they're hoping for on an annual basis. Now, originally, of course, they thought they might be able to get 1.6, 1.7. IMF have actually downed that target now. And really, a lot of that's going to be down actually what happens with the rest of the world, because we have a certain individual running the United States economy in a rather odd way, going against all the normal economic ways of trying to do things, and very likely has a possibility of causing a global recession, which does not mean depression, just 2 quarters of shrinking economy, so it's not that damaging. But it's not in China's interest, certainly not in America's interest. And of course, we sort of sit as a cork between them, bouncing around, affected by what they do. But that's not an excuse. There's a lot we can do for our own economy in the meantime, despite our politicians.
I'm going to come back to the tariffs, actually, but I do want to talk about the domestic scene for a second first. Yep. So you mentioned the tariffs, they will affect us domestically. It looks like the government, and particularly the Chancellor, are going to lay the blame at the White House for the domestic shocks. Is that fair, or is it actually a little bit more complicated than that when we're looking at our own lack of growth and our own problems heading into what will be the autumn budget in October?
I'd love to say it's a nice simple answer, and the answer is no, but it's not. As you say, it's a bit more complicated. Basically, what's happened is the effect of Trump changes haven't really come through yet. But what it has affected is confidence. Remember, confidence, that's the one word that runs an economy. So whether it's you and I going out for supper, or people going out and buying more stuff, or more importantly, businesses actually investing, they look at this market at the moment and they're not sure what's going to happen with regard to interest rates and banking, lending, and such like. And so the answer to them is, well, we'll wait, sit on our hands and see and wait till it gets better. That's not a good way to run an economy. The government in the UK could do things domestically to actually get things moving, which is not impacted by what's happened by the rest of the world. One of the key areas to mention in the UK, we're primarily a service-driven economy, which basically means it's the consumer going out and buying stuff. If you were to get rid of, say, stamp duty, as opposed to having what we've just done is actually put something up, but get rid of stamp duty, what does that do on property? Well, it encourages people to actually go out and maybe move house, move flat, do something. But they will spend money on kitchens and bathrooms and other things, and of course pay VAT. And VAT is more income for the government. So actually, by changing this, it doesn't lose much income. It actually gains more income, and more to the point, on a broader scale, starts seeing the British economy moving in a positive direction.
Yeah, but it doesn't look like Rachel Reeves is going to take those choices. Do you think when we get to the autumn, we're in for more tax hikes, more spending cuts?
I think it's going to be very difficult this autumn. If I were her, I'd go and dig out that quote from Maynard Keynes, which was basically on the basis that if the facts change, I change. What do you do? And so that's going to be a great excuse. In fact, things have changed, and therefore my old cast iron rules are now going to be broken. It's not very good for cast iron. So actually, this does give her an excuse to get out. There'll still be lots of shouting over it, but actually it's an important thing to do. Sticking rigorously just to those tightened rules won't do you any good at a time when we need some more flexibility in here. And you need to create that confidence, not just in terms of domestic investment, but also overseas investment. And that's been one of the issues we've seen rising rates in the gilt market, because people are saying, Britain, we like you, nice country, great history, never defaulted. But the way you're running an economy at the moment, if you want me to buy your debt, you're going to have to give me a better return than that. But again, perversely, the largest holder of our government debt is actually the government. Over a third of it, as a result of quantitative easing, was actually developed between the government and the Bank of England. The debts are issued and then purchased by the Bank of England. So rather perversely, we find ourselves where actually the government twice a year gets a coupon, a dividend, from itself to itself. You couldn't make this up. But we find ourselves in a strange position with quantitative easing. So I'm not saying that it's all goes away, but it's not quite as bad as everybody thinks in terms of debt. But if we continue to have no confidence internationally, will have to pay more. And a key figure to remember with our debt, if I go back 3 years ago, we paid round about 50 billion a year on our basically our borrowing costs, as it were, our credit card. That's now gone up to over 100 billion, which is more than a defence budget, and is a really very significant figure indeed. And so that's one of the areas that people should be looking at, because as you implied before, that will the external people still be trusting this government and see it as an area where, well, we'll invest in Britain. So with all the political changes with Brexit and things like that, then the political issues of a war in Europe, and then a rather strange president coming up with new ideas, being probably the last idea he heard, we don't have a clear picture of what's going on. And no investors, investment companies, or companies themselves are going to commit money when they have the slightest idea of actually things getting better or worse. At the moment, we're sailing in the fog, and I'm afraid the lamps don't go very far.
Yeah, okay, let's return to those tariffs, return to Trump. It's the elephant in the room. So I get the impression you're not particularly enthused with this as a strategy. I mean, is it a strategy at all? Is there, Steelman, the tariff case, right? Is there a case for this long term as a sort of bargaining chip with the likes of China and even the EU? Can you conceivably make a case for it? Or do you think he's just being buffeted around and has now had to retreat because he went too far and is all a bit silly?
Yeah, I think he will have to make some changes. We've already seen some of that coming through in terms of suddenly the immediate reactions were then put back 90 days. So there is that flexibility. Mind you, a lot of that information and view is coming from the Fed. And of course, as we know this week, GB News has been reporting, actually, you get the president saying, almost threatening the head of the Fed.
Well, more than almost, isn't it? Yeah.
And we don't even know if he's got the power to do so. Mind you, that's never stopped him in the past. But what we need to be able to do is a steady hand on the tiller, which the Fed is normally pretty good at. They're quite dull. In times like this, dull is quite good. And so that steady effort to make sure that money is cheaper and the banks are capable of lending, and a key element to make sure that the driving force of the American economy, Mr. and Mrs. Joe Schmo living in Little Rock, Arkansas, shopping in Walmart, if they get fed up, then that reflects across the rest of the economy, the American economy. And at the moment, their confidence actually is not too bad, but it's beginning to weaken off. So what we need to do is get away from populist sound bites of running the economy into more strategic long-term goals as to what they want to try and achieve. It's not easy, but it can be done. So the tariffs themselves, if you just look at a tariff now, you're paying more coming in. Short term, President Trump's right. You'll get more money coming in. Longer term, actually, of course, it works the other way as well, because they'll be putting on tariffs, so your goods aren't so popular, they're not so many sold, and therefore that impacts on the economy. So he's not looking at the whole picture. He's just looking at one part of it, and that's dangerous. And that's why the markets are reacting so skittishly at the moment.
Yeah, I see him saying that there's lots of money coming in, but I mean, isn't this, it's really a tax rather on the American consumer. It's the consumer who pays that.
Well, so that's spot on. And of course, that's not what he sees it as. It is a tax on the consumer. The consumer's going to be paying more. And what's the most frightening issue for most Americans, comes out in all the various reviews, it's inflation. And of course, our generations never really see bad inflation. I go back to the 70s where I saw my father on a fixed pension, and we had inflation at 25% in 1 year. So hang on, 25% of your pension's just gone, and you can't get that back. So more recently, we're seeing a bit more rise in inflation. It'll start coming down a bit, but even so, these policies are able to lead more inflationary pressures going up. That means the interest rates won't come down quite as fast as some have been thinking, and investment will be held back until they can see actually the economy is moving faster and inflation is coming down.
Now, the Chancellor is in Washington as we speak. She'll be there for the rest of the week, trying to get a deal over the line to try and reduce these tariff barriers. Do you think that's likely? And then further to that, are we facing serious concessions to the US, digital services, agricultural rights? Do you think we're going to have to move quite significantly in that space to try and get something over the line?
The answer is yes, because our economy compared to America is that much smaller, and we're going to have to make some adjustments and changes. And so, for instance, the key element that would affect us would be pharmaceuticals, where we're very good at developing and also making and exporting. And if Trump wants to include that in his tariffs, that has a direct impact on us. So the fear I have here is that there's no clearer path as to what happens later this year and next year to assure that actually there's going to be more growth. The president blames Biden for an economy that was in a terrible state. Well, actually, it wasn't. It was actually doing really rather well. Not very exciting, quite dull, a bit like Biden, but it was trotting along quite nicely. Of course, then we have the issues of the pandemic and those elements, and that's all been blown off course. What you need now, though, is imagination from governments, US and us, to actually encourage more investment and expenditure. How do you do that? Well, in Britain, as I mentioned before, stamp duty would encourage more expenditure. There's no shortage of money in this country. But also, as well as that, providing enterprise investment schemes, which have been around a while, extending that and extending it not just so it tends to focus on the southeast, but throughout the country. This doesn't cost the government a penny. Until those companies go bust. Some will. But others will actually succeed and they'll be making profits and they pay tax and more income for the government. So that's a positive route out. But our politicians don't talk like that. Unfortunately, what we've seen with this government, politicians, or this cabinet, which has very little business experience. And so when they go on about the fact they've raised the minimum salary, no, they haven't. They don't pay the salary. We pay the salary. And so that impacts on our bottom line. And am I going to recruit somebody else or not? Or let people go because I can't afford to? So actually, it's a very short-sighted view here and one which is potentially dangerous. And that's another reason why that vital word of confidence has been knocked out of the markets. So be prepared for more volatility. But for investors, brave investors, you don't have to sit there and start punting on things. There will be good quality assets being sold at a discount. So could look upon it as a spring sale. But mind you, that's not to say stocks are going to go down further. I would advise clients at the moment, you have your cash pot. If it drops down to a certain level, invest some now, simple in a tracker fund or something like that, FTSE 100 or S&P 500. And then actually what you do, if it drops lower, you might buy some more. But not huge amounts of money, because the huge amounts of money long-term investing, that's your pension. Don't get that mixed up with things like some Bitcoin or other elements like that, or taking unnecessary risks. Because bear in mind, the primary driver of good investment isn't the stock market going up and down like a yo-yo listening to silly gits in red braces. Actually, it's the compounding of those dividends year after year after year. And that's incredibly powerful. And to give you an idea, there's a number, the rule of 72. Divide into 72 the sort of expected return you hope you're going to get. Now, I'm just going to make a number up. Let's say 7%. 7 into 72, well, there you are. You're roughly there's going to get 10. So it's going to tell you basically that your money is going to double every 10 years. That may not sound wildly exciting, but if you're building up your assets over time, 10, 20, 30, 40, 50, 60, that's how you create long-term wealth, not trying to bet on tomorrow's fashion stock. Because this year's fashion fad is next year's tank top, and I'm a proud owner, sadly, of too many tank tops.
Justin, finally, I'm going to let you go shortly, but I do want to ask about your longer-term outlook. So let's say 5 years' time, 4 or 5 years' time, where is the UK economy? It's a long way out, a lot can happen. But I'm just asking you to look forward. Where are we? Where are we going?
Right, well, I'm an optimist, not enthusiastic one, but an optimist, not a pessimist. If you are a pessimist, go and get a case of scotch and go and sit in a cave in Wales and forget about it. If you think we're going to be here in 5 years' time, what you will see is probably a further indebted series of capitalist economies. There will be growth, but the question is, have the leaders got the strength and the courage to start pulling the levers, which will actually mean they will have to borrow more, they're going to have to invest more, and create that confidence coming in. Now, having a war on the other side of your economy, of your continent, doesn't help either. So we need that to be resolved one way or the other. So I'm more positive because these things can't carry on like this forever. And actually sound minds will come in and say, actually, we're going to have growth in those areas where we know we're quite good at. In Britain, it's technology, all those technology. You have Silicon Roundabout and Silicon Gorge, that's Bristol apparently, Silicon Beach, that's Brighton. And so all sorts of these, and these are hubs of high-tech companies, and they breed. So once you've got 2 or 3, in a couple of years, you find you've got 6 or 7.
And so these small companies... I know I said this would be the last question. Do you think they will, as you put it, breed in the UK, or will they not decide it's probably easier to go to the Middle East or to the US? Or is capital flight not a big problem at the moment?
That's quite likely to. I was talking earlier this afternoon with about Intel. Intel shares have been doing okay, company not doing quite so well, and so where's its future? Now, one of its big bases is in Ireland, 5,000 people there. And if Intel's saying, well, we better listen to what the president says, we're going to be better off actually doing investment in the States, that means someone like Ireland feels the pressure of that, and there's very little they can do about it, apart from show themselves to be efficient and effective, and be able to suit all to actually develop Intel. And that can be quite a difficult argument when you're up against the United States of America and a president who has a rather unusual way of looking at the economy.
Well, Justin, sorry to interrupt at the end there. So if you want to have your final word, we'll sign off here, and thank you for joining us. But Justin, very quickly at the end here, 5 years' time, good or bad? Out of 10, what are we going to rate it?
Right, 5 years' time is going to be better. In the meantime, you need a cutout of Corporal Jones and Dad's Army saying, don't panic. So there will be growth. It won't be that exciting. And it's going to take some courage for investors, and particularly institutional investors, to be investing in Britain, not because of charity, because we've got some great businesses. But unfortunately, you get a lot of short-term private equity businesses which don't help it. They just flip it the entire time. So 5 years' time, it's not as bad as it is now, but I don't think we'll get the party poppers out.
Well, Justin Urquhart-Stewart, thank you very much for joining us here on GB News. Really appreciate it.
Great pleasure. Thank you.